Two things are at stake here.
Yes.
If we say we should keep on borrowing, we should keep the NPR at 12%.
Yes.
It's going to definitely have a negative impact on industrialization and all of that. Just like
no, what I'm saying is that
let me quickly. That's one end. At the same time, the reasons the CBN gave, we cannot just put it aside, Mr. Boyo. So, where do we stand here? Shouldn't we agree and come to a compromise and say, look, we can't let the industrialization in the country and borrowing and keep depressing businesses in the country, and at the same time we cannot allow excess liquidity to keep on going on another route that the CBN
when you are looking at interest rate as one driver of industrialization. It's not. It's a totality. It's a package. If you want to industrialize, there are so many things you need to do beyond interest rate. Interest rate alone. I mean, look, if you look at Mr. Boyo cited the Federal Reserve. He's talking about the American system. Okay? That is an economy where everything is a credit-driven system. If you are going to do anything, you are going to borrow money. But here, our system is not modeled like that. So CBN is not looking at, okay, we're going to use interest rate to industrialize. That might be maybe one of the benefits they are looking at. But they are looking at, look, if we allow this excess liquidity, and don't forget that they also mentioned public sector deposits. Now, actually, public sector deposits are not supposed to be with commercial banks. That's an anomaly. Because the role, Banking 101 will tell you that the central bank is the banker to government. So all deposits are supposed to reside in the central bank. So when you now find them, in commercial bank, the central bank cannot just say, okay, well, let me just leave them with this deposit.
What's your take on his stance?
Well, the argument Martin has made echoes what the central bank governor was saying a week or two ago, when he indicated that it is not only interest rates that should drive an economy. And I laughed. I said, how can a central bank governor whose MPR is 12% say that it is not only interest rate that should drive an economy? Look, unless, for example, let's take the area of farming. Unless you want to remain a peasant farmer with your hoe and everything like that, or you want to remain a producer of pure water with just, if you have to do expansive business that create opportunities, tremendous opportunities for employment, you need money. Whether you are in agriculture, whether you are in industry, whether you are in education, in the field of education, schools provision and things like that, whether in the area of private provision of hospitals and things like that, you need cost of money. And if you are in an environment where the people who are going to supply you the generators, who are going to repair your roads and things like that, are buying their generators with loans that they also got at 20-something%, and you say interest rate is not important, I say go back to school. Because, let me tell you something, it is very important that we recognize this. The Europeans and the successful economies that have made interest rate the beacon of where the economy is going, they are not silly. They know what it's all about. So if you now say that we should consider that people are having to provide infrastructure, we have infrastructural deprivations and things like that, the infrastructural deprivations can be accommodated by the industrialists if the interest rate was cheaper. Instead of paying 20-something%, he pays 3%. Now he has over 20%, which he has saved. Can't he use it to provide power and things like that? I think people who say this, they don't really truly understand the true concept of monetary policy.
Okay, Mr. Boye, just please indulge me. Please, I will beg that you indulge me. Let's start with, what is the role of the CBN? If you could,
excellent.
If you could, well, just summarily, let's cut it down.
Let's briefly say that the CBN Act 2007, first paragraph, defines the work of the CBN as the maintenance of price stability. Price stability, heavy word, or heavy phrase. But what does it mean? It means that prices should be stable and cost of funds should be stable and exchange rate should be stable in such a manner that me and you can live a comfortable, predictable life. Because why? If, for example, prices are not stable and you have inflation at, say, 10% annually, year-on-year inflation, over 10 years, if your income hasn't changed over 10 years, you earning 100,000 naira 10 years ago will be earning almost zero value money 10 years after. That is why you have to be afraid of inflation.
So what are the tools that they have for managing this?
The tools that are available to the central bank, behold again, interest rate, cash reserve ratio, liquidity ratio. These are the things. But these are all related to modulating the interest rate. I tell you one thing.
So if we then want to look at the growth in the economy and the fact that jobs are not being created, can we put it all down to interest rate, or are there other facilities or tools or infrastructure or other things that is outside the remit of the central bank?
Let me use a very clear example, okay? The whole body is there, but if the oxygen is not there, the rest of the body is functionless, okay? I have told you, the other things that you have talked about, these infrastructural deprivations, they are not obtained free of charge. The people who have to provide them also have to borrow. And when they borrow at 20-something% and supply you with your generator, and you are paying also 20-something% on the diesel that you are receiving into your factory, and you are also paying 20% for the suppliers of your materials and things like that, because they also, before they supply you as an industrialist, they also borrowed money from the bank. It's a very, how would I say it, a very subtle chain that links everything. I'm not saying that there are no issues about government policies and things like that. I'm saying no. I'm just saying internationally, universally, the driver or the beacon of an economy is what is happening. What is the cost of funds in that economy? How much are industrialists borrowing from? And if industrialists are borrowing at 20-something%, of course, you won't find many people participating in industry. And if many people are not participating in industry, you are restricting the employment opportunities in the system. And if you restrict employment opportunities and employment falls, what happens? You don't have many people who are earning wages. And if they're not earning wages, they cannot buy your bread, your yam, and things like that. There's no demand. And when there's no demand, what do you have?
So when some economists who support the position of the central bank say that we have this difficult challenge, if the government is not playing its own role, the CBN's hands are tied to its back, and they will consistently use the interest rate to manage what is supposed to be their role, as you just defined it.
Excellent, Kaudi. I will, if you permit me, I'll just read one phrase here from you. First of all, we've got the liquidity surplus in the banking industry. As I speak to you, there's over 1.3 trillion or so sitting in banks and belonging to government agencies. Now, basically, that is the surplus funds, are at 0%. And the banks are lending about 2 trillion naira to the government and charging 13 to 14%. Now, that's a very good business model, isn't it? Give me your money for free, and I lend it to you at 14%. So why would I go and lend that to anyone? You might think that was Henry Boyo speaking, wouldn't you? No, but it isn't. This is the central bank. This is the central bank governor saying that he has been presiding over an empire which has been providing money to the banks on one day. I'm not putting what's in, that's there. Go and find out. It's 24th of July, this day, that he has been providing money, consciously providing money to the banks and going back and borrowing it back at 13-14%. And he cynically says, isn't that a wonderful business model? Could you expect any better? So you had a situation where for ages I've been saying this, that it is tomfoolery to put your money in the hands of the bank and borrow it back at 13-14%. Now the central bank governor himself has corroborated what I am saying. So in other words, the implication is that we have unnecessarily been borrowing at 13-14%, money we did not need, money we gave to the banks in the first place. In other words, we have been further burdening the banks, and the banks have been using our money to declare profits.